Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Big day yesterday, Federal Reserve coming out, no change in interest rates. But again, some of the commentary initially taken as dovish, still saying 2 rate cuts the rest of the year. The markets initially breathed a sigh of relief. Markets rallied to the upside. But now we're seeing a reversal. In fact, at one point this morning, we erased all of those gains on the S&P futures and came back in as the market began to digest the fact that the Fed said, yeah, 2 interest rates, but we're expecting the economy to get much weaker by year end, potentially be in a recession, and also there are other issues like the uncertainties, which markets hate uncertainties on tariffs and inflation. So all of this is now making the markets very nervous. Like, okay, they're saying the economy is probably going into a recession by year end, but they're still saying only 2 rate cuts. These are all issues now, and the markets are beginning to fall. Let's walk over to the big board and take a look at this. I think it was fascinating to watch yesterday, right? So you have your initial reaction. Here's where the Federal Reserve statement comes out right there. You get an initial pop and then sideways chop into the press conference with Jerome Powell. Then we get the big move up on his perceived dovish tone, still saying, yeah, don't worry, 2 rate cuts. But again, markets sold off a little into the end of the day. This is the futures overnight, right? So we were trading actually neutral to higher. In fact, we even got close to the highs from yesterday in the overnight. And then all of a sudden, the big institutions said, no, that's not really what was said here. And this is not as good. And this is, again, amazing because it's coming on an options expiration, triple witching expiration Friday, right? So tomorrow being Friday, triple witching, $4.5 trillion in options will be expiring tomorrow. And again, triple witchings are usually the ones where you're going to see the most games played, where the markets go one way and then they go the other way and then potentially the other and back and forth to just whip the retail folks out of their calls and then their puts and make them all expire worthless, making massive money for the institutions. Either way, look at this rollover. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 red candles. In fact, 11 and 12 if you count those down there, before the markets got a little bit of a reprieve here in the pre-market. And what's amazing, look at this, guys. Where did the S&P futures bottom here in the short term? Look at this. All right, draw a trend line right across. Like, that's right there. Classic technical analysis, right? Where would you expect there to be support? At the level that was the beginning of the pop yesterday on the Fed decision. That now becomes a pivot low, which then the futures in the pre-market hold and get a bounce off of. Now, just my perception, and we'll have to see how things trade, but in general, when you get a big move down and then you get this pattern, what do we know that pattern is? Again, down move like that. Oftentimes it leads to further downside. So I will not be surprised if at some point today, or if not today, tomorrow, we start seeing another leg to the downside. And again, this has been a very whippy week. We started the week, Friday of last week was a bull move up, a bounce off of the lows. Monday followed through, then Tuesday reversed, then Wednesday we saw yesterday a rally again. Today we're seeing downside action. This is again classic options expiration maneuvering or whippiness, as again, puts and calls will be expiring worthless or close to. That's the goal of the institutions on options expiration Friday tomorrow. All right. Daily chart. This is the daily chart of the SPY. This doesn't reflect today's down move in the option in the S&P just yet, but nonetheless, what do we have? We have the down move into support. We have the choppiness this week. Now we're trading back down here at this point. Again, what are we doing? Are we forming a bearish pattern? That could be, folks. And again, we know that pattern. We just went over on an intraday S&P. Well, here it is on the daily chart. In fact, isn't that amazing, folks? If you look at the chart we just looked at, in terms of the rollover in the S&P overnight, and then we look at the bounce, it's almost identical to what the daily chart is showing us as well. And this is, again, a good reference or reminder that patterns tend to repeat because they're based off human trading, right? And humans have subconscious ways of being, right? We all have subconscious things we're not even aware that we're doing it. But again, you have these same sort of patterns repeating, which is why technical analysis gives you a leg up. It's not a perfect solution. There's no 100% trader out there. But again, when you have patterns that repeat over and over again, we can make educated, high probability decision making that can put us at least on the right side most of the time, and that's super, super key. All right, so again, we have the S&P again into support here, bouncing on the daily chart, but again, starting to trade sideways, a lot of chop, which could be creating a bearish pattern that could spell trouble for the next couple weeks in the markets. And I just want to say again, Jerome Powell going to yesterday, he did say 2 rate cuts basically, but he also said that tariffs have now changed his ability to make an educated decision on whether or not inflation is going to come down. Is the new base of inflation 3%? Because it certainly seems like that. Essentially, if you look at what he was saying that sure, 2 rate cuts will throw you a bone on the market to the market investors, but there's a lot of uncertainty even to the Fed. And if there's one thing I know about markets, they hate uncertainty. They'd much rather know bad news, being certain of bad news, than uncertainty on which way it's going to go. And I've explained that to you guys many times before. All right, just to go over to this, I do want to bring up our website here and just go over one thing. So if we flip down here, folks, on our homepage, Verified Investing, we have our Fed Watch tool, and this is updated every single morning here. And again, we just have so much data on this, but I would like to jump to this because it gives us a basis for what the market is expecting. So let's walk over to the big board again and take a look. And what we have here, folks, is the Fed Watch tool. And right now, this is the next meeting coming up on May 7th. So again, this is the next meeting. This is where we currently are in terms of interest rate policy. So again, we're currently trading right here. In other words, the markets are expecting us to stay at an unchanged. So next meeting, there's not expected to be a cut. However, the following meeting on June 18th, we are expecting a rate cut, and that's one of the 2 that the Fed has guided us to believe will come this year. Then we go to, again, the next meeting is no cut, and then the next meeting after that, which is the September meeting, is expected to be a cut here. And then interestingly enough, and this is a slight change this morning just in the new data, and I'm just seeing this now, is if we look, it's now pricing in a small chance in the December meeting of a 3rd rate cut right there. All right, so again, as of now, breaking news, the market is pricing in 3 rate cuts this year, not just 2, even though Jerome Powell guided to 2 yesterday. Now, what is that telling us? It's telling us that the market thinks the economy, based on what Jerome Powell said about the economy slowing quite a bit into year end, is saying, okay, we'll be in a recession, and therefore the Fed will be forced to cut a 3rd time by year end. Now listen, this is a long way away. It can change many times before, obviously, we get to December of this year, but that is interesting to take note of. And then just look, from that point on, there's no rate cuts expected until July of 2026, and obviously subject to change. Really, what I focus on is just the next, let's say, 6 months of data here. But very interesting to go over that, I think, again, and just keep an eye on this. Because again, while most people are cheering more rate cuts and they want more rate cuts, you also have to look under the sheets of this, right? What does it mean? Well, if the Fed is having to potentially cut more and inflation is still where it is and tariffs are, even Jerome Powell said tariffs are pushing inflation up most likely, then you have a scenario where it tells us the economy is getting very weak and forcing the hand of the Fed, even in a weak economy, to cut. And then the question is, does that then add to inflation pressures even more? By the way, long-term good for gold. Long-term, maybe even good for Bitcoin, although again, remember, Bitcoin still trades with the stock market overall, and therefore, if the stock market goes lower, Bitcoin could go lower as well. All right, so let's jump back to the charts here and take a look. We have the 10-year yield. Look at this, guys. So remember earlier this week, we talked about the potential for a head and shoulders pattern, but I said, listen, you need to see a curl over in the 10-year yield to form the right shoulder. Well, lo and behold, between yesterday and today, we're starting to form that shoulder now, which again, if we break about 4.13% on the 10-year, we all know what that means, right? It means the head and shoulders is triggered and we can do a measured move. We can take the high here and drop it down, and we take that distance and we do it from wherever it breaks, which is a flat line, and essentially it brings us to about 3.45 as a target price for the 10-year yield. Now, if you're in my service, Smart Money Stocks and ETFs, we are along the TLT. The TLT has already broken out here. Here it broke out. Here's your consolidation, bullish consolidation. Now it's beginning to make its next move up. I intend to hold this until we see that 3.5% on the 10-year, and I'm guessing that'll be up somewhere up here in the target range on the TLT. The dollar, again, we knew this was a head and shoulders, and it played out almost perfectly to target. And now look, the dollar's actually catching a bid here. All right, now a couple stocks in motion today. We have JBL, which is Jabil Circuits, or it used to be Circuits. Now it's just Jabil Inc. But again, this stock is popping on earnings pre-market. In terms of a level, I was looking at this, and it's the only level I'm really seeing, and I discussed this with Drew, one of my top traders here earlier, is really around 155 to 156. Currently pre-market, it got as high as about 154. But if we flip back to the daily chart, notice the pivot low, and so we're now looking more at a day trade. Like, this would not be a swing short or whatever. To me, this is purely would be day tradable as a level today around 156, give or take just a little bit, and obviously it would have to push up there. Five Below, which is a retailer, this rallied sharply on earnings. It is starting to curl over now, though, and again, just looking at the chart, I was looking at this earlier as well. There's a trend line that if it rallies back up, I'm taking this low pivot to this low and just dragging it through, and that would be my first level, really. So retrace, so basically you have a trend line here, it broke down, then a retrace to the scene of the crime around 94 would be a good shortable intraday level today. Now, we do have earnings, and this is always exciting, guys, is that, basically I love earnings season, right? I love when we get into earnings season. We're not in earnings season right now. The nice thing about it is every once in a while you still get a couple earnings numbers here. So today, for instance, after the bell, there are three big earnings: Nike, FedEx, and Micron Technologies. So what that means is tomorrow morning there might be some good trades in those stocks. Even after hours, we're going to be trading this in Earnings Trader, which is now part of Smart Money Stocks and ETFs. So we'll be live trading these. If you're part of that service, you can obviously get into the room after hours, or basically just before 4 p.m. we go live there. But looking back at the chart here, this is basically a chart on Micron that's trading in a range, right? So essentially what we would call this is a wedge pattern. It's not a very tight wedge pattern, which makes it a little harder, but essentially what we have here is if it rallies, you're going to have resistance at around this level here. I would say somewhere in the range of 108, give or take. And then if it falls, big support right down here around just below 85. And so this is one of those where, sometimes you have a great pattern going into earnings, and it's like, I think I showed you Stone Corp yesterday, STNE, where it was this beautiful inverse head and shoulders going into earnings, and it was like, oh man, the odds of this rallying on earnings on a bullish inverse head and shoulders is very, very high, like 80% chance that this goes up, and sure enough, it did. Great rally yesterday. But when you look at something like Micron and it's stuck in a wedge pattern, you don't really know. I mean, could it dip here? Okay, well, if it dips here, I buy it down to 85 or 84. If it rallies here, it's not that big of a move, so I'm not convinced I would short it here, but at least I would keep it on my radar. But again, essentially, you have trades out there going into earnings, sometimes, very rarely, but sometimes they can be great trades going into earnings. But a majority of stocks, you just have to wait for the news to hit, and then you want to trade the resulting move. And that's one of those with Micron. I don't have a great read on it going into earnings. All right, a couple other charts here. Let's go to FedEx, FDX here. FDX here, look at this, by the way. This is an old chart I had annotated out already, and just look at how it's played out. I mean, this is a beautiful thing. I even had thought that if it rallied back up on earnings, I think this was from the last earnings, in fact, back in December, that if it had rallied on earnings, I was going to short it right there. Never did, gapped up and then came back in. But look at how it broke the parallel, retraced to the scene of the crime, and then down it's come. Now, the question is on earnings, are we going to go lower? Now, for me, the level I'll be watching going into earnings, there's a big level around 216 to 217. That would be a big drop, but that's what you want on earnings, so the risk is lower if you're going to play it as a contrarian kind of buy play. And then on a sell short, it would be back to this trend line here around 270, scene of the crime again. And again, second hits of the scene of the crime, not as good, but still should be a big enough move to warrant a day trade in the after hours. And then Nike, again, Nike is just, the stock has struggled immensely. I have former levels on the chart here. We can get rid of those from a long time ago. I don't really have a great read on this. The only thing I do see is a potential downsloping trend line here at around 60, just below 68. And then same thing right here. You have a secondary kind of trend line there. So it is kind of a wedge pattern. Resistance would be around 80. Support would be around 60, just below 68. All right, Bitcoin. Let's talk some Bitcoin. I'll go to the big board to discuss it today. If we take a look at Bitcoin, yesterday it had a good move. Why did it have a good move yesterday? Well, because the stock market was rallying. All right, today it's pulling back, the stock market's coming in. So again, the risk on, risk off trade with Bitcoin continues to be the case. And I want to make a point here, folks. There's a lot of Bitcoiners out there that are watching, and I love that you guys watch, but we all want, including myself, that eventually this becomes the digital gold. The problem is once you start introducing ETFs, all right, it opens the door to investors that are really just trading stocks mostly, but now they're like, oh, let me dabble in some Bitcoin. Well, they're going to trade Bitcoin in the ETF, and the ETF, remember, if someone buys in the ETF, then the ETF buys Bitcoin, but the same thing works on the sell side, right? So if a Bitcoiner sells in the ETF, or someone new plays Bitcoin and buys the ETF but then sells it, then the ETF has to sell Bitcoin. And the reason I bring that to your attention is that it makes Bitcoin more in the short term a risk asset until it establishes itself as the digital gold, because those traders, those investors will be very likely to just dump everything in their portfolio when things get scary, including the Bitcoin ETF. They're not really in the mindset yet of a lot of the hardcore hodlers that are like, oh, Bitcoin, I'm just going to hold it forever, right? That's not the mindset that an ETF investor is in just yet. So just keep that in mind. Point being, we still have our resistance right up here. Okay, so we'll continue to watch that. So right up here is resistance. Here's our support zone right down here. I was kind of rooting for a rally and continuation because I have some altcoins that are long. We're in the money on some. We're slightly out of the money on others. But, you know, I still think there is a chance that we could trade up into this level. But inevitably, the path leads us down here. And I've been saying that for a while, that eventually we probably do hit this level. That level should be big support. My only question mark if we go lower than this level is the fact that I've been talking about this level for 6 months. Now everyone is talking about it. And when everyone talks about it, what does that mean? It means oftentimes that it's not gonna just stop here and make everyone right? It tends to make everyone wrong. That's the most likely outcome. And so it does mean either it doesn't get here or it goes below. And again, a lot of that will be determined by the stock market. All right, so just a couple tidbits there to understand. Okay, let's look at gold. Gold has officially hit that high end of the parallel, and again, it is pulling back. Again, I am short gold here, not because I don't love gold in the longer term. We'll walk over to the big board again, but more so just because this is a shorter term trade, right? So again, there's trades where I'm, like I have my holdings in gold that I've had for years. And I'm just like, all right, I see what the government's doing. I see what all these governments are doing. They're printing. Therefore, gold should go up in value, right? It's almost like the same concept of Bitcoin when Bitcoin matures into that digital gold. It's like there's a stated amount. Granted, you can continue to mine gold, but it's hard to mine, right? And so there's a limited supply versus printing of dollars. The Fed clicks a button and there's an extra $1 trillion basically, and it's a much easier thing to print. But the key here is on a shorter term basis, we have a very clear signal up here, and we are seeing a pullback in gold. The other thing to mention, and I kind of talked about this a little with my members, is that oftentimes things top on big news or bottom on big news, right? And so in the short term, the Fed decision yesterday, we saw a pop in gold, and therefore that oftentimes leads to a short-term top, and then kind of that exhaustion move, right? Oh, the Fed just did this, gold pops up, and then there's your exhaustion pullback. Now, listen, you're still in an uptrend, and you got to respect the uptrend. And so, whether you pull back to this high here, or this low here, or down to here, who knows? But essentially down here is a buy. All right, and I continue to think that, again, I don't believe that the Doge cuts in the government are going to stick, because I think as soon as the economy gets weak enough, that the pressure on the politicians will make them go back to what they do best, which is, number one, pretty much nothing. Number two, printing money, right? Or stimulating through spending. And so again, maybe just call me a skeptic. It is what it is. Until what do they say? The leopard changes its stripes, or the tiger changes its stripes. It is what it is, right? It's still a tiger. All right. In any case, let's go on to a couple other charts here. We'll quickly look at silver. Silver again struggled yesterday and basically was flat. Today down down again. So it just shows you that silver is struggling here. It couldn't even get back to this high even yesterday when gold made a new all-time high. Again, I don't have a trade here on this, but I would be a buyer if it really has any sort of major dump out. Oil, flat on the day, was up a little bit. It continues to make what we would call in the technical world a bear flag pattern. So again, sharp move down, bearish flag. It continues to mean that, to me, there's a ticking clock here, where if the more you go sideways, it's getting closer and closer to the next break here of this major support. And my guess is one of the next big economic reports on the economy, if it's weak enough, it will send oil below this level and start the next leg down. Lastly, natural gas. We've talked about this bearish pattern. Again, had a nice day yesterday, but right back in today. And again, that bearish pattern, it's hugging this trend line, but it's still a bear flag. And that leads me, based on probability, to assume we see some downside action. Again, another leg down in natural gas. All right, guys, listen, it's been a full-packed episode here of the game plan. A lot for us to digest. What I do is I'm going to go over there to the trading room, going to sit down, get on the microphone with our traders in the Apex Live Day Trading Room. We're going to take it one step at a time, looking for trade setups, all while I keep an eye on the bigger picture on swing trade setups with smart money stocks and ETFs members. So listen, this is a market that's going to be volatile. We have to assume this is a new market from what most people are used to for the last 6 months, 8 months, 12 months, even couple years. This is a market that's going to be very big in terms of down moves, but then bounces as well. For us as swing traders and day traders, this is our golden zone. This is where we can make the most money. So let's get to it, guys. Thank you so much for tuning in. Check us out at Verified Investing, and thank you for your support. See you tomorrow. Take care.